Hi everyone, and welcome to this live event. As usual, I'm here to share with you my view of the market and review a bit of the calendar and see what we can expect from the market from these days and the next for this week. In fact, so let's start by checking the calendar. Anyway, I would like to start today's live coverage talking about what happened last week, right? The market all of a sudden believes that the Fed will rise rates, or there's a high chance that the Fed will rise rates next June on after the Fed minutes, which were released on Wednesday, right? Remember we discussed this, guys. The market was really hoping that happened, right? We had those hopes pending like a Damocles sword above the market, and all of a sudden the Fed came in and said, "Yeah, there's a chance. It's a live meeting," and all of the jawboning coming from officers is also pointing for a two-rate hike this year. Remember what we talk about this in September. We are too close to elections to be a month where the Fed can actually move, and that leaves just June and December for the two rate hikes. All of the Fed officers are defending these days, right? So that's what market is so hopeful on, and change its mind about a June rate hike all of a sudden with these minutes, because they give us a slightly tip that it's possible, right? And if it's possible, it's almost sure. Not meaning that I thought that it's almost sure. In fact, neither inflation nor growth are pointing for a rate hike, and the Fed keeps saying that the rate hike will be data dependent. Yet at the same time, they keep also saying that two rate hikes, even three, are likely this year, or possible, or factable, or whatever the word they use. The fact is the dollar is getting stronger. We saw a pause in Greenback's rally on Monday, with markets quite choppy and trading limited. But after that, okay, that's my cat. Give me a second. I will kick him out of, of the room. Sorry. Sorry. Yeah, Murphy's lost. Anyway, I was saying that after yesterday pause, the dollar is back on the bullish track and will probably continue. Anyway, and now moving into the calendar, uh, we had the week starting with PMI readings in Europe, and um, what I can make of this is that Germany readings, which were better than expected and above previous month readings, are showing us that Germany is still the center, right, of Europe. It's the one saving the euro area, and I wonder myself how long will this situation last, right? How long could the rest of Europe depend just on Germany? Readings were positive in there, as I said, better than expected, but the whole euro area readings were below previous months, below expected, and quite disappointing numbers, showing that overall the region is not growing as it should, right? And this is into the second quarter. We are talking about preliminary May readings, okay, which means that the slowdown that started by the end of 2015 is extending into the second quarter of 2016 and giving us little hopes from some euro strength. So if the euro keeps weakening and the market is still betting that the dollar will, that the US, sorry, will rise rates in June, and therefore buying the greenback, seems the euro dollar is poised to test the 110 level pretty fast, right? Anyway, as I was saying, also the PMI reading in the US was hardly a good number, 50.5. They barely avoid recession and contraction levels with this figure. It's not really supportive for rate hikes. So what we can see is the dollar rallying until June, and the Fed or Shalen or whoever remaining on hold in June, and all of a sudden a sell-off in the greenback. But until then, and for what matters to us, which is this week, the dollar will probably remain strong. And the final review of the German GDP figures for the first quarter. This is the final reading, and that's why it did not practically move price today. much previous one, so nothing to watch there, right? The sales survey, on the other hand, shows that the economic sentiment, meaning looking into the future, both for Germany and the euro areas, it's negative, right? It fell so overall in line with what we are talking about. Although the current situation in Germany has been assessed positively, really not actually relevant because the market is always trading the future, right? Not what's going on actually going on right now. We are trading now a rate hike, which may or may not take place in a month. We are trading Brexit, right? That may take or not take place in a month. The market is always looking ahead, right? Anything in the calendar is all news, and it gave us a bit of a background of what we could expect from now on. For the US session, I do believe that the only relevant news will be the home sales release, right? Housing data has been improving over the past 2 months. Really shocking because the housing sector tends to be the first to tumble when there's some economic slowdown or concerns affecting the market. So I do believe that if we have a positive rating above what we're expecting, right, we may see the greenback rally even farther. And for this Wednesday, we have more confidence surveys in Germany. I do expect them to be overall positive, right? Germany, as I said, remains strong. I'm not pretty sure that the market is aware of what's going on with Greece. It's not paying attention these days to Greece, but maybe on Wednesday they will pay a bit more attention because we have the meeting of the euro area financial ministers, right? You know, Greece is discussing or where to pay back or not the first, well, a quote of what they have been given. The euro area is asking them to pay. Greece is asking for a delay. There's a lot going on in Greece, and the market is ignoring that, right? And all of a sudden, it can turn into a huge market mover, right? But so far, it's under the mud, right? We are not talking about it, but be aware that this is a subject that could suddenly affect the market in the days to come. The Bank of Canada rate decision. Honestly, I don't expect Canada to act this month. It all will depend on the statement or hawkish or dovish statement, and we are going to talk about um, Canadian dollar and oil in a few when we turn to the charts, right? On Thursday, I do believe that United Kingdom GDP readings, right, which given that they are preliminary ones, will be quite relevant. But I don't expect any positive shock in the year. In fact, I do believe that there's a good high chance that the figures will disappoint, okay, and even came in below what we are expecting. So beware of that because that could put a halt on this ongoing pound recovery that we are going to discuss in a few seconds. Durable good orders in the US. I remember last month were better than expected after plummeting in February. We have a not so bad number in March, and we are expecting a slight progress for the core reading in April. You know, guys, if these figures are better than this, better than expected, the greenback would probably meet the 110 with the euro, particularly if the price remains at current levels today and does not recover far away above the 12th region. Japanese inflation readings. To be honest, the market does not pay too much attention to Japan, uh, but we probably pay attention to this one lately. Sorry. And as I was saying, inflation, the market was not paying too much attention to Japanese data, but these days we are a bit more concerned of what's going on in there and if Japan could reach the 2% inflation target, and if it does, if it can or will not enlarge stimulus. So inflation will be closely watched this time because if it starts to grow, inflation starts to pick up, will mean that no further stimulus will be added, and that will make the vision a so much stronger currency, right? The market is so willing to buy the Japanese yen these days, and it's not daring too much because of fears of intervention or additional stimulus or quantitative easing or whatever you want to call it. Anyway, and to close the week on Friday, we have yes, GDP readings and personal consumption expenditures. It's the second revision, this one, not the first one, so it won't be that much shocking. In fact, even the first one was not, because it was pretty close to previous quarter readings. But anyway, I do believe that maybe the market will pay even more attention to vigilance wars than to whatever the GDP reading came, depending, of course, of the deviation. If we have a strong deviation for what the market is expecting, then it will probably shock the market. Anyway, give me a second. I will flip the charts. There we are. Okay, let's start taking a look at the market. As we were commenting, should snow. And as you can see, the dollar has resumed its advance. It's strongly higher against most of its rivals, but the pound, right? The pound has skyrocketed today after Carney, Governor, Bank of Canada, sorry, Bank of England Governor Mark Carney said that he's willing to provide liquidity to the markets and to prevent them from going wild in the case of the Brexit. So they will inject liquidity before the referendum. And that's why the pound is so high, because Carney warned that he is aware of what may happen and he will fight against that, right? So the pound is playing a different game today. But anyway, if you take a look at the chart, it's breaking through some sort of an interesting level, because this is the 46.6 or 61.8, sorry, 51.8% retracement of the latest bearish run. Not sure if I lost connection. Oh, okay, seems not. Okay, seems my MetaTrader just lost connection. Let me check. Sorry, guys. Okay, yeah, seems it's just the MetaTrader. Pity. Anyway, we are pressuring a clear resistance level, and we have been above it. Okay, up to 46.60, which seems to be a possible bullish target for today should this momentum continues. Although I'm not so confident, because if we retreat back below the 46 figure, I would expect the pair or to surrender to dollar strength and go back to the 44.40, 44.80 region where it has been earlier this week. Those are the probable bearish targets should the dollar continue running. Okay. But for the most, remember that this is playing a totally different game with the market on whatever may happen with Brexit. And for the euro dollar, well, the pair is currently around 1170. We have two major supports, static support levels, 1160, 1120 are for me quite strong both. We have seen the price standing there a couple of times, many times in fact, in the past when the pair was aiming higher, and the same happens when the pair was going lower. 1120 is even more relevant. So my take is that if somehow we lost that level, okay, here we are back, we can go down to 110, right? That 110 is then the next probable target. But for me, 111 is the 1120, sorry, is the level to watch right now for a breakout lower. Okay, I have this daily ascendant trend line. This week comes around 1060, 1070. So it's possible that the price will test it, right? Particularly if we had really strong positive ES data, but for most, 1120 seems a more logical bearish target for the euro dollar. And to the upside, we have some resistance around 1240, right? And a stronger one in the 1280, 1290 price zone. So unless we recover this level, I'm not seeing much of a bullish potential in here. I do believe that even approaches to this level could be seen as as selling opportunities for now. Okay, and changing into the dollar Japanese yen. I was watching that the pair has been struggling around this 109.50 region for almost 2 weeks already, trying to break higher, unable breaking, retreating. The fact is that we have seen the pair post many times relevant lows in the 110.60 region, right? And this is the level. This is the level to break to talk about bullish yen, and we reached 10.58 on Friday. So as long as below that level, the upside potential in here is quite limited. Okay. Um, Now the pair is rising because stocks are happily going higher also, but I would like to see the pair moving above 110, okay, and then reaching this level only to meet selling interest in here today. We need a big trigger, right, to break above this major resistance, and we have not one, not today, not tomorrow. Maybe inflation on Thursday in Japan could be the trigger we're looking for, but it has to be outstandingly negative or outstandingly positive to actually move the pair enough to trigger a breakout either higher or lower. Uh, and of course, the breakout lower will be below 108.70, which is the 50% retracement of the latest bearish run, and a really strong support level. If you see, the price has been hovering around that as it's currently doing around this Fibonacci resistance, and will probably uh, had a little of battle around this level if we fall back until it finally break lower. Okay, but for now, short term, it seems we are going up, tracking stocks, right? And take a look at gold; it's also coming lower. No risk aversion today. No say heaven's demand. Anyway, something I follow quite a lot these days also is the Aussie because, as you remember, the pair has been retreating from this year rally, and last week we have been battling about around the 61.8% retracement of that rally, but all of a sudden we have a breakout lower today, which for me means there's scope to test the 0670 level, right? Major psychological support. That's the probable bearish target, and from now on approaches to 72 should mean the sellers will probably jump back into the pair. In the shorter term, I do believe that the immediate support right now is 71.05, around that level, and if we take that level we can go back down to 760. I'm not expecting much more of this particular one today, mostly because it has already shed a good bunch of pips, right? And the median resistance from for today short-term talking is 71.75 and then 72.10, where, as I said, I do expect some selling interest. And the correlation between the Canadian dollar and oil prices seems to continue touching, right? We are seeing the CAD weakening despite oil is near 50 or close to it. American dollar did not reach 50, but it was quite close last week, 48.50 or so. Uh, Crude oil prices were higher because of all of these output disruptions we had in Nigeria with terror attacks, in Canada with wildfires, but all of a sudden this output issues seems to be coming to an end. Canadian fires are seem to be under control, and for what I read lately, Nigeria is starting to produce oil again, although conflict there continues. I do believe that the crude has reached a major resistance level, right? In fact, it can go up to 49.20. For me, the line in the sand is not 50, it's 49.20, and I do believe that if we take that level, we would probably break above 50 quite soon, with not much trouble. But in the meantime, we have reached the level, we have retraced, and we are currently consolidating near the highs, right? So that keeps the risk towards the upside, okay? Because There's no clear signal in charts that the price can retrace or can give up its recent gains. Market is really hopeful that in the case of Fed, that the demand for oil will start growing during the second half of this year, right? It's really hopeful on that. And we know that production has hit record lows in the US. I do believe oil rig counts it's at the lowest in years. So there is a bit of a risk, and the market is quite sensitive to news of growing or diminishing output. But overall, I do believe that we're not going to see it back in 25, guys. Anyway, I also believe that we are not going to see it at 100 dollars a barrel either, right? Maybe 50, 60 region will be the upcoming normal for oil. But in the meantime, there's a slightly positive tone, and we need to break above 49.20, which is one buck away, to see the commodity running farther. I also believe that the main support region, right, would be this area around 46, 45.50, right, in between 45.50 and 46. The commodity should meet buying interest to keep the bullish trend alive. If we lost 45, then the risk turns towards downside, and we'll probably go back to 41, 42, uh, but not 25, right? So, uh, having said that, the Canadian dollar keeps weakening despite oil prices are at near their highs. So, remember, we draw this trend line a couple of weeks ago. There we are, continue to running beyond it. The market may enter a small pause right now ahead of Bank of Canada decision on Thursday, but overall, I do believe that the upside is open and that the pair can keep on rallying, particularly if we take this early April high, right? This is the monthly high at 32.17. Yeah. So that's the level to beat, right? This one, sorry, I know. There you have it. Okay. 32.17 is the level to beat. I believe that if we take that, we will confirm a more sustainable bullish continuation in time. So the commodity will be probably heading towards the 34, 35, and the commodity related currency, sorry, will be heading towards that level. I'm seeing some bearish divergences in here, right? In the forward charts, price is making higher highs, right? And the momentum indicator is on the other way, right? If we can take the trend line from here, in fact, we have been making lower highs in the indicator, and it's about to cross its midline. At this point, the divergence is firstly it's not correct, it's not confirmed because the price remains above the trend simple moving average, and the RSI is barely correcting over both readings. And there's not enough bearish momentum coming from technical readings to tell me that the pair will crumble, right? Uh, I do believe that, however, we can see a downward corrective movement. In that case, 30, 70, and 30 will be the probable bearish targets. We can go down even to 29.80 or so, right? This region, without actually affecting the upward tone in the commodity related pair in the dollar CAD. Uh, 29.80 is for me a line in the stand these days. If we break below that level, then yeah, the risk counter was downside. And the last but not least is oil, right? It's gold, sorry. After topping at 1303, we're going lower and see where we're getting a major resistance support region, right? We have base of the channel, the daily ascendant trend line, and the 100 moving average, all around 1235. We're $6 away from that level. Uh, if we lost that, I do believe that we will probably fell down to 12, right? Yeah, that's a probable bearish target to 1200. Seems more than possible for gold if we lost 1235 today or tomorrow, because the market will rush to take profits out of the table of all this bullish rally. Remember, gold keeps trading correlated to Fed mood, and if the Fed is hawkish, gold will plummet, and if the Fed is dovish, gold will rise. So as long as Fed officers keep talking about a possible June hike or consider it appropriate to rate hikes from this year or all that jawboning we have been hearing lately, gold has little chances to recover ground. Okay, keep that in mind and uh, play it well. Anyway, sorry, oops. Okay, here I am. I want to thank you for being here this time with me. Hope you enjoyed it. Hope you have find something to make out of this, and see you back next week. Okay, thank you and bye bye.